As I said in the first video of this series, there are three indicators I'm a big fan of, and I'm a fan of them because I've had some really good success over the years trading with them. And they are number one, Fibonacci, number two, moving average, number three, the CCI. Now, what I'm showing here is a random currency chart. Basically, what I did is I closed my eyes, scanned down the market watch, highlighted a currency pair, and that was one I was going to use for this example. And on this chart, what we see is the moving average, which is this line here. What you can't see is a CCI because it's down further, and it would just make this too big for the video screen size that I'm using here. But we'll walk through this. So what I'm looking for is price to trade on either the upside or the downside of the moving average. So in this example here, we can see this candle is above the moving average. What I need now would be the CCI to be trading above the zero line, which would confirm only taking long trades on the shorter time frame. If we're over here, as you see, price is below the moving average. If the CCI is below the zero line, I can only look for shorting opportunities on the lower time frames. This green line right here is where we have not only price above the moving average, but we also have the CCI trading above the zero line. Okay, so moving average, CCI, trend determination. That's what I use them for. Now here we are in the 4-hour chart. Now this applies to any time frame. It doesn't matter. You can use this on the daily, weekly. It doesn't matter what you're using it on. And I'm using a few different things here. I'm using retracements, extensions, and symmetry, which is just basically measuring the previous downswings in this up move. And we've got two areas here that showed up as trading opportunity zones, because just because you're in a trading opportunity area doesn't mean you're actually going to get into a trade. For example, price is in here. If I don't have a trigger into this trade, I don't get into the trade. Especially if the price starts going back down, I would not be in this trade. And you can see here, this area here is a lot bigger than this one. I much prefer these tighter areas right here, but you take what you get. So in these tighter areas, can generally just take it off of this chart. But these wider areas, I drop down to a lower time frame just to really hone in on this area right here. So my risk is not as large. A smaller risk for me allows a larger position size. Not only that, we've also have our profit targets lined up here. This is for this trade, and up a little bit higher, these two here are for this area right here. And as you can see, this one not only hits the first profit target, also goes out of the second target. These are multiple reward trades, okay, risk reward trades. You can see this one here just rocking right through both of them. Okay, so that's what we have here. Trading opportunity zones using Fibonacci, symmetry, retracements, extensions. Now this is that first zone that we looked up at on the other screen. Here are the levels, and you can see it's a pretty big area. Okay, let me just mark it off so we can just see a little bit better. This is the area that we're looking at. Pretty wide, right? We don't know it's not going to be this wide once price comes in, because in actuality, it only comes down into this area right here. But we don't know that getting into it, right? So we have to be prepared for, what we see. Price could have just generally came down to this area here and then came down further into the area. We don't know, right? We're just taking what we see at the moment. So what we have here is we've got white lines are going to signify where the triggers or no trigger is. So what do we have here? Well, I go right back to the CCI moving average combination. Why? Because it determines trend for me, right? So if it determines trend on the higher time frame, can't it determine trend on the lower time frame and use as a trigger? Sure it can. So if price is trading this way, we're in a down move. When price trades back up through here and the CCI crosses the zero line, are we not back into an uptrend? Sure we are on this time frame. This is how I determine the trend. What happens then? We are going to buy stop the high of this candle here. And as you see, it's not going to trigger, because I already said it doesn't trigger. And what happens is this CCI comes back below zero. Price trades right back down. We didn't get triggered up on here, right? If we would have got triggered up on this trade, where would our stop be? Our stop comes into this area here. Obviously, you want to give yourself some wiggle room. If you don't want to trade it tight against that. You would have still been in this trade on this pullback, but a lot of people would have just exited out because, it's the psychology of trading. So what happens over here is we get another trigger. And that trigger is price going above moving average. CCI is crossing above. Buy stop the high. Price goes up, hits the first target, and as we saw earlier, hits the second target as well. Okay, it's further on the right, but we saw it on the other screen. Okay, so this trade, it's a winner, and it's a multiple risk-reward trade. It's on this one, we got a couple of kicks of the can before it finally takes off. Number one, we already know what we're looking for. Price to trade above the moving average. The CCI to cross above zero, which it does. Buy stop the high, we don't get traded into the trade, right? Stop is down below here. If, for whatever reason, you got triggered in here, as you can see, even though price comes up here, this red candle doesn't take out the high, retraces back down. You obviously would take this off. Because what else happens? Let's take a look. CCI comes right back below. Trades off. Another potential trigger. We don't get triggered in there. Third one, trigger. Buy stop the high. Let's go down and check our CCI. Oh, yeah, our CCI is saying all room to the upside. It triggered in here, and as you can see, price rallies pretty strong to your first target, right past your second target, and just continues on. Again, another multiple RR trade. So let's summarize. The moving average, we use that to determine the trend, and it's part of a two-step process in triggering in the trade. Okay. We also use for a momentum play that I haven't described here. The Fibonacci, we use that to determine in advance of price zones that I might be interested in for a setup and a possible trigger, and it's also for profit targeting. The CCI, use it to assist in trend determination, trade triggers, and a momentum play. That's also not described here at all. Now these are my favorite ones. Okay, you may find something different. And I didn't go into exact settings or exact rules because eventually this might be a course I put together. But it's a simple idea. Determine the trend. I determine my setup, determine the trigger, manage risk, done. Hope you've enjoyed this. Thanks for watching.